The cricket broadcast rights deal was done this week, with Cricket Australia netting $590 million. That's 118% more than the value of the previous deal. 9 won the Australian international rights, while 10 will show the domestic 2020 competition, the Big Bash. Well, let's hear from the CEOs of those two networks, what they had to say about the deal.
She didn't know I was commenting. It's more like it's an ouch moment for me. This is another. I keep on getting rolled out at these events, and I've just paid a lot of money for sport. I don't know how smart I am, but I'm certainly passionate and committed to them. There was never any doubt that Channel 9 was not going to get the cricket. There was much debate and much people thinking about what certain people were going to think and not think. As long as the management team we've got at Channel 9, we won't be losing cricket. It is Australia's national game. It is wallpaper over summer. It is a much bigger sport than the ratings always say it is, because you're right, people are at holiday places, campsites, all sorts of things. The exciting thing for us is we're partnering with Cricket Australia on the digital rights. Digital rights is going to be television everywhere, and that's where the world's going. And it's an important milestone for Channel 9 and Cricket Australia for our broadcaster to actually be having all the digital rights as well. It's not being hived off to a telco or anybody other third parties. So we see a lot of value for Channel 9 in that.
To represent Network 10 and to have an association with Cricket Australia. I worked on and off with Cricket Australia for many, many years, and I've known James, and we're thrilled to be partnering on such an iconic sport. It is Australia's national sport. We see there's great opportunities with the Big Bash League. We've got 123 hours that we'll be broadcasting live in peak time over January and February. And again, we're really excited to begin to change the programming mix within Channel 10, and we think that live sport and cricket is a key and critical part of what we want to do moving forward.
Well, let's get more on this with our co-host James Manning, editor and publisher of Mediaweek in Bangkok this week, and also the CEO of media buyer Starcom MediaVest, Chris Nolan, here with us in the studio. James, if we could start with you. I mean, this really takes cricket into the big league, doesn't it? I mean, the total TV rights sales there now, yeah, what, $590 million and $800 million across the 5 years, including rights from the international TV sales to India and the UK and the like?
Yeah, absolutely. It's a high-stakes game, isn't it, Bridie? With David Dingle talked about, he's been spending a lot of money on sports. Last year he was part of the $1 million package for the NRL rights. They sort of had roughly half of that, a little bit more. This year another big spend to keep the cricket. All this after their sort of problems with debt. So you can understand why they have to think so carefully about getting involved in this. And also, of course, this week in a deal to allow them, if you like, to grab those cricket rights was spending money on 9 Adelaide, buying that from Wincorp, and doing a deal to take 9 Perth, if they manage to change that reach rule.
And is that quite significant for the industry?
Yeah, it is. Look, the free-to-air TV stations don't change hands very often at all in the metro markets or regional for that matter. So I think the last big sort of change was when 9 took over NBN. Probably it must be 5 or 6 years ago now, but this is the first major transaction since then. So yeah, it's very significant, and 9 will have a challenge now because it doesn't perform competitively in that Adelaide market, nor does Perth when they get to pick that up. So they'll really want to change that.
Chris, is something that you mentioned when we were speaking to you earlier was that the Big Bash League, obviously this was crucial for 10, lobbing that huge bid there to try and get some sports rights back. It's won the Big Bash. Do you see this as quite a win? Will it help them turn around?
Oh, look, absolutely. I mean, I think that what the overall deal tells us is that how important big event TV is, and in particular live sport, really crucial to the network's format. So for 10, who are in a rebuild mode, to have some live sport that they can turn into significant event TV, and that's their challenge, is to take the Big Bash and turn it into significant event TV, and to do it in January, February when they're launching their schedule for the year. I think it's a huge opportunity for them, and certainly something that obviously James recognised he needed to do. And he's been able to do it without the burden of the huge financial burden of having to have the whole cricket rights. And I think that's probably equally as important for him as he has to invest across his total TV schedule.
Hamish McLennan, I mean, he's been in the job now, just over 2 months or so. How have you found him in your dealings with him, and are you impressed with what he's done so far?
Oh, well, I think this is probably a really significant step from Hamish. It's an indication to the marketplace that they're serious about, fixing their ratings issues. That he's got the support of the board to take the big bets that he knows need to be taken. And I think that this will all go well for helping build the confidence back into the marketplace for 10.
James, I just want to ask you too about Nine getting the digital rights. How important is that?
Yeah, look, very important. We heard at the recent Seven Investor Day, they talked about all their experimentation. They're experimenting with streaming at the moment. They'll almost become a mini subscription TV platform, if you like, down the track. Nine really want to get into this space too. So having that on tablets, on smartphones is critical across a summer period, and it'll really help them monetise, start to earn back some of that massive investment.
All right, we'll have to leave that discussion there. We'll come back to James and Chris in a moment. But now for a check on how all of this news has played out on those media stocks on the share market this week, here's Stan Shamu from IG.
Fairfax shares are back in focus today after the stock issued yet another profit warning and announced yet another restructure. Of course, this isn't new news at all for the market, as the stock's done this on quite a number of occasions in the past. We have seen investors sell the stock down to around 57 cents this morning, where it managed to find support and has recovered slightly. Just going forward, I think the brokers remain quite negative on the stock. I've already heard from Goldman Sachs coming out and reiterating their sell rating on the stock. They've got a 50-cent price target, and they feel that the structural issues and the rapid shift from print to online or digital media is certainly accelerating, and they don't feel that Fairfax is going to cope with the rapid shift in the short term. At the same time, JP Morgan's got an underweight rating on the stock. They also feel that these structural issues for the company will continue to present headwinds, and they've got a 56 cents price target. Out of all the brokers covering the stock, 33% still have buys on it, 27% have a hold rating, and 40% have a sell rating on the stock. So it's still, the balance is to the negative side. Of course, Fairfax is looking at some of these cost initiatives, but I think the market at the moment is at a stage where it's unconvinced that this will actually make a difference, given that the main reason why the company continues to go through these changes is because of the structural problems in the industry that they haven't quite managed to deal with. I think in the short term we might see some support at that 57-cent level, but if we break through that, then the stock will be wide open for a move down to around 50 cents.
Coming up on Media Week, the TV ratings and how MasterChef's been faring in its first week back for the 5th season.